Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. As traders now assess the Australian dollar outlook to a fresh month, we can see that price action is still struggling at the 65.90 level. With a huge week of economic data, and along with that with central bank rate announcements, including the RBA, which is expected to keep rates on hold at 3.6% at its Tuesday board meeting. We also get the US Fed May meeting monetary policy decision, with the main event, the April US labour market or the non-farm payrolls report. In other data on Friday, the Fed's preferred inflation measure came close to expectations for March, but it remains well above the target as it hit the same rate in February at 0.3%. The so-called core PCE price index gained by 4.6% year on year in March after rising 4.7% in February. Although the Fed inflation number is still coming in slower than expected, we are, or no doubt, expecting a 25 basis point rate hike when they meet this week. So looking at the technicals, if we do see the rejection again from 65.90, this could put actually a slightly further pace on current rise and therefore look towards 66.60. But I do feel any further than that will struggle or even be a little bit hesitant, as we can still see the 60-day moving average, which is close to around the region of 67.26. So lower than previous of 67.60 to 70 area. The euro, well, the Friday price action was again hesitant towards that key level around 110.60.75, as the dollar index, which measures the greenback strength against a basket of six major currencies, remains somewhat flat around 101.50. With much, as I mentioned, economic data and central banks, I do feel that the dollar could pick up pace and therefore see a move for the euro as it continues to fail that top side and look towards 109.25 and reassess from there. The dollar yen surges through the 134.80 level on Friday and still remains somewhat positive as it looks towards a now target of 138, having claimed the 136 region already. Technicals a little bit overbought, but this is a very strong candle, and no doubt the market was caught a little bit off guard, so there could be even a squeeze if there is any short positions in the current pattern, and therefore, as I've mentioned, up towards 138. But looking at a broader case, we could even see 142, which I've been holding now for some time or talking about. Sterling also was a little bit stronger on Friday, as it now covers further gains towards the highs of 125.65 area. But the technicals are still somewhat positive. With little pullback, we could see a move on towards as an extension of 126.25 to 126.70 and reassess. I still feel that gold is in a little bit of difficulty as we can't break above this midway point on the RSI. Along with that, with a heavy MACD, the call is still very much to 1,958 to 64, with any advancement towards 2,000 or even as high as around 2015 to fail. Reassess from 1,958, because if we do see a bounce, we could see a market trade back to 2,000. So with the gap filled, along with that, respecting the level of 72.5, we've posted a bullish or an engulfing candle that now awaits confirmation. If we see a break of 77.35, this would give further indication up to a region of 80.5 as a potential target, and therefore could see a little bit of whipsaw price action on the way. But nevertheless, the gap being filled, respecting the base, and now posting a bullish candle that waits confirmation, could see further gains for West Texas. Well, that's a wrap for the start of this week. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the day.